Welcome to class 13, which is the last class, the end, the finale, the end of the series. And you're gonna
So soon, man.
so soon, eh? I was actually thanking God. I was praying before this class, telling him that thank you for this far. For me, it may
Uh-huh.
not seem a big deal, but I normally see big deal in almost every small thing. I'm just like that. So this is a big deal. So I was like,
Mhm.
thank you. Because a lot could have
Me
gone
too.
wrong, but somehow we've
Yeah.
come. I like finishing things. When I see a project come to completion, I just know
Mhm.
that is God because it's not possible. Most times it's not normally possible just like that.
Yeah,
So,
because it's so easy to start,
mhm,
and then maybe somebody falls off, or you can have so much enthusiasm at the beginning. I won't lie. I mean, you can even keep this in the video that
mhm.
as your student, at one point I was wondering, where will I even finish? I'm still trying to grasp lesson two or something. I kept going. So I appreciate.
Yeah. So even with other students, the other paid students before, they would like take time. They would have pay, and that was the idea that I had of maybe raising the cost at that time because I used to have my cost very cheap and then it will drag. So I decided to raise it up to reduce the number of students and also to see the commitment. So I would notice some students would take long, like they would drop off. So unaona mi niko na pesa yao, si ati sijakata kuwafunza, but hawakuji class, wako na so many so I'm like, should I refund them the remaining part? But they're like, no, 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 we'll come. It's just that I'm busy with this and this and this. So yeah. So I was like, yeah, like it is so impossible for many people to complete something. Just like if I can give an example with campus, I remember we were being told during matriculation, the first week, we were told that many of us would not complete school. I don't know if in your time we are told the same thing.
Yeah, till you'll be discontinued,
Yeah,
Dama.
yeah, like you start like us, we started about I think almost 600 students. When we were about
Wait.
to graduate, I think we were 200, not more than 200. And I'm like, okay, I get it.
Wow.
I get it. So we
Did
had
people shift courses or something?
like maybe missing marks, maybe they dropped off, maybe they went to, because I have some friends who went to Maju, or
Mhm.
maybe something happened for them. Something good may have happened for some, something maybe not so good may have happened. Others got babies, others got married, like so many things. Others couldn't afford school fees anymore. So many factors.
Mhm.
So I normally know the weight that finishing something has, and I respect and I see it as a blessing because I was like, even me, at some point I was not able. I thought I would not be able to finish my course because there's a time it was becoming hard. Not to be honest, the mathematics of too it was too much for my head,
Mhm.
and then I had other projects. I was also doing programming, so I had like so much in my mind. Like what is it called? Burnout. I had burnout. So previously, I would call off a semester. I think I called off semesters like 3 times when I was in school. One time it was valid, the other 2 times it was because of burnout. So I wanted to request also another
Mhm.
another deferment, but I couldn't because I was also late. So I think it was inevitable. But that last semester was so hectic. Like I was about to give up. So I get. I was like, hata hiyo nini yote nimechana. But it is, I think it is like it is life, because people, there's this nice opportunity in life, but people normally don't finish. Not many people end up finishing. So that is the advantage of the people who finish. You get?
Mhm.
So there's a bit,
Yeah.
everyone wants to achieve something amazing, but for some reason, not everybody gets there for one reason
Yeah.
or and all those reasons are valid. So I normally pray to God when I'm finishing something. I celebrate. It's a very big win. So
A cool
today,
thing.
eh? Sorry.
It's a cool thing.
Yeah, yeah, yeah. So
Mhm.
so this is our final class. It's the course finale. And in this class, we're gonna be building your edge, your system, and also planning your success as a trader. This is the final class that I'll be helping you out. The other instances, maybe in future, it is you who will be coming with telling me, help me here and there, you see. So
Mhm.
this is where uh we're gonna make you a systematic trader. So this class is the culmination of all the other 12 classes and the transformation of knowledge you've achieved or gained from me, from maybe you can say beginner because you had some experience from class one to now, right now. So today we won't just learn anything theoretical. As I had told you, we're gonna do more of practical bits. So I want you to create a personalized trading system with a proven edge. So basically, that's all you're gonna do in this class, building your edge. And this is where all that you've learned, all your experience as a trader will converge into making you profitable and having a repeatable framework. So again, the mission of this class is to define what a true edge is, build a complete trading system around your chosen strategy. I told you to choose one of two strategies, to create your personalized trading plan, which will be your handbook, your professional playbook, your rules, and then integrate all the knowledge you've learned into one coherent approach that will benefit you, and then launching your trade career with confidence and clarity. So you won't need to fear when you step into the market every day, or maybe every week, or the time you want to enter any trade. So the first thing that I want to point out is edge. What is edge? An edge is your statistical or informational advantage that makes you profitable over many trades. Later, we're gonna see the difference between edge and trading edge and trading plan. They're slightly different. So yeah. So think of it like this way. A casino has an edge because the odds are mathematically in the favor of that casino, the casinos in general. Because over thousands of bets, they will always win. Your trading edge works the same way. It's not that you're going to be winning every trade, but having a positive expectancy over time will guarantee your profitability. I think I've repeated to you that we don't have like a 99% win rate. The highest you can have is 80% win rate. So you need to expect losses at all times. So we have different types of edge. I will only highlight three of them, which is statistical edge. And what it means is repeatable patterns with positive expectancy. This is your strategy, your trading strategy, because your trading strategy comes from patterns. You are following patterns, you're looking for patterns. An example is support and resistance bounces, and then market structure breaks, and then indicator signals according to which strategy you pick. To develop this type of edge can take 3 to 6 months. The other one is informational edge, acting on information before it's priced in. This is where now fundamental analysis comes in. So an example is news trading. fundamental analysis, and market correlations. So this may take like 6 to 12 months. I told you it's a bit more, it's a bit more intense, not rather, it's a bit harder than statistical edge, because fundamentals are hard for you to like make them sink in your system. But for statistical edge, once you backtest, everything will be good. Execution edge, which is very, very important. This is what you'll be struggling with the longest time, for the longest time. And this also applies with psychology. So the execution edge is having superior trade execution and management. And an example is having better entries, better exits, discipline, psychological control. It will take like 12 to 24 months, okay? And then how to identify if you have a real edge. You have a real edge when your strategy shows positive expectancy of 100 trades. I'll show you how to calculate expectancy. When you can explain why your strategy works, not just that it worked before. So if I come to tell me in your sleep or in a dream, tell me a strategy, you will have practiced it to the point that it is in your subconscious mind. It performs consistently across different market conditions. And another one is when the results are reproducible, not luck-based. Like you can go right now, if I tell you to go to the market and look at enter a trade within 30 minutes, you're able to do that. Maybe later in the day, you can do that again, another time in the day, because the market moves in patterns. So if you're able to recognize those patterns, it means now you have an edge. You can execute it without emotional interference. Okay, so any questions up to there?
No question.
Okay,
But I
so
like the last bullet. I
mhm,
like the last bullet where you're saying you can execute it without emotional interference, because it speaks to the psychology we learned.
yes, because remember, trading is, say I told you it's 80%. We concluded that it's it carries majority of trading, like almost 80%, because it's from where you start entering your trade, throughout the trade, and once you exit the trade. So that emotional bit is when you see that you can be able to do that without having any emotional interference, no, you are headed somewhere. So you can have that confidence that you are now a good trader. Now, you don't have an edge when you're just copying others without understanding. When the results only work in specific historical periods, that is curve fitting. For example, in expert advisors or algos, there are people who just choose cherry pick some seasons where that algo will work. So you need to stress test your edge, or rather your system, to make sure it can work in almost different seasons or historical periods. You can't explain the logic behind your approach. Emotions heavily influence your decisions. Okay, so when you are very emotional while you're trading, just know you don't have an edge yet. You need to streamline yourself and your edge to make it beneficial to you. And then the results are widely inconsistent. So, for example, you are used this week, you had like a 90% win rate. Next week, you have like a 40% win rate. Next week, that one, 90% win rate. The other one, 20% win rate. You see, there's something that must be not working correctly somewhere. So you just need to look what are the patterns, my edge, because you're gonna see when you go to the charts that your edge can almost be replicated daily. So that's why I don't normally bash any kind of trader, whether you choose to be a swing trader, whether you choose to be a day trader, whether you choose to be an investor, whether you choose to be a scalper. I don't bash anyone. Why? Because all these patterns repeat themselves almost daily, not even daily, like almost all the time. So it's up to you to be able to identify it and choose when to enter the market. So for people who may say, me, my setup comes only 2 times a week, they are very right. But if they went to the lower time frame, they can find that same setup almost 5 times a day. So it's up to you to choose where do you want to fit in. Okay. So according to your psychological point of view, are you able to manage trading 5 times a day? Because it doesn't mean that the swing traders are right because they're just picking 2 trades a week. It means that they choose not to go to the lower time frame because maybe they're engaged in other things, but it doesn't mean that their setups can't be found in the lower time frames. So now here is the formula for calculating your age, which is the expectancy formula. We normally say expectancy equals to win rate times average win cumulatively minus loss rate times average loss. So for example, and you're gonna find something very interesting, by the way. Cause let's just say, because it's very, very interesting. So for example, if you're analyzing your age, and you can find this by backtesting. First of all, do backtesting. So you can say, I will look at the 100 trades and see if my expectancy is good. 100 trades is okay. You can go all the way to 1,000 trades if you have the time, or even 500 trades. It's also okay. But don't do 20, I'm a 50, and then you say, now I have an edge. No, just try going backwards. You can, if you want even to stress test it, like me, I like to do 10,000. 10,000 trades. Those are so many years of backtesting. So, and I always backtest every week. I try to backtest and see what did I miss within the week, and see if my setup, or rather my system, or rather my edge, is it still playing out. So I really love backtesting. Even though I trade, I also like going and looking for the missed opportunities and seeing the general expectancy. You can be doing it. It's not, once you get a grasp of it, I would encourage you to be doing it every week. On Saturday, maybe if you have time, 2 hours, set aside 2 hours or 3 hours just to backtest. And that's the reason why I find myself just trading one pair, because it will be so much work to trade 3 pairs or 2 pairs. One is enough. You can add one more, but I always say one is enough. So that's the reason. So it's because it's a lot of work in itself. Because every weekend you try and say, okay, yes, I took these trades, I made money, yes, but let me see, let me look at the prices or the market in fresh eyes. Other thing I like to do is going backwards. It's a project that I started, but I've not yet gone far. I was like, I'll go to Trading View to the farthest I can go and see and start trading from there. So start backtesting from there. Is that possible? Yes, it is. You just go this week, this week, this week, this week. That's why, because I want to perfect my strategy and see all the possibilities. So that will be your work. You choose one pair. For example, you say USD JPY or gold. For me, it's gold. You make sure that you know the ins and outs, everything there is to learn about gold. May know gold almost at the back of my hands because I've done so much work learning it, mastering it, and so on. So this is the work. It may seem a lot of work, but in hindsight, because it's the one making you money, it's not so much work. Okay, so I hope we are clear on that. So it's not a must to do that, but I would encourage you to do it. You'll see the market very, very clearly. Like you'll see patterns. Hizo patterns zikikuja hata bila kuchora anything, you'll just see them on your with your eyes. So it's like training your eyes. You see, practice makes perfect. Just like that. Even sometimes I used to do something crazy like, yes, I've backtested and I've traded, but I rub everything and start afresh. Like, am I open? Even in my chart, I see the one in my PC. I have like different gold. Gonna gold one, gold two. I take all the golds that I can see on Trading View because one of them have back tested. I want to see it in fresh eyes, like that, like that. Even in this one, let me just show you. I have different gold setups because that's for the same reason. I like I like looking at gold and see all the angles I can. And the reason for that basically is to train my eyes to see gold. So I have this one, I have this other one, I have, and all of them I'm using them. So I had a third one. I think I removed it. But I normally, yeah, let me see. Yeah. So I
So that's with
normally,
different brokers.
yes. So you just come here. If you're choosing USDJPY, it seems crazy, but but it's the only instrument I'm trading. So you see, there's all this USDJPY. So on my PC, I have USDJPY, like 5 of them. Once I'm done, I make a, like, I used to do that, but nowadays I don't do that. But one of the projects I want to do, because there's an algo I'm trying to make, so I really need to understand something to do with gold. So I was like, wouldn't it be crazy to go back all the way to when maybe in 1978 and start coming to today to see how gold was with that strategy? So that's another form of backtesting. So basically, yeah, that will be a job. And again, this thing is giving you money, so it's not a lot of work, and it's training your edge, basically. So, for example, in edge analysis, your win rate has 55% win rate. Your average win is 60 pips, and then your loss rate is 45%, and then your average loss is 30 pips. So, your expectancy, according to that formula, will be 0.5 times 60, 33, 0.45 times 30, 13.5. It will be 19.5 pips per trade. So every trade that you take, all of them, if it's 100 trade, that is your expectancy. You're gonna make 19.5 pips per trade. So the result is you have a positive edge, because of 100 trades, you'd expect to make 1950 pips. So normally, if you calculate, maybe let me take and I want, oh, you have wa hii class na hata haijaanza jameni, inataka kufanyia nini? so so this 1950 pips, we normally say, for example, if you're trading gold, you would say, and you're trading 0 point, let's start with 0.1 lot. A zero, you just count with 0.01. So for someone with a small account is 0.01, but for relatively a bigger account like $1,000 is 0.1. So you say 1950 times 10, because your account is standard. You see, you're making about, let me just calculate for you. So this is how you normally calculate your edge. So, and it will simplify for you. It will give you confidence in that when you're even taking your trades, in case of anything going wrong, it's okay, because it will pay back the money. Like, it's a business. Unajua pesa yako tu itakuja. You don't need to worry, sindio? So with $1,000, you can make back 1950, which is a good amount of money, sindio? Because this is about times 100% times 100. This is about How do you normally calculate percentages? I think if I'm not wrong, it is 195%. So it's a 195% increase. Because if your starting balance is $1,000, which is a very astronomical amount of money. For a retail trader, this is okay. This is very, very good. Very, very good. So that's how you calculate that. So let me undo. We delete clear all drawings. And then close. Okay. So what you're gonna find out is you don't need a high win rate to have an edge. A 40% win rate with a risk reward of 1:2 is actually profitable. So what you need to find out now is to get a good strategy that will give you a positive expectancy. And then you need a good win rate. 40%, 50% is good. And then you have a high risk reward, like 1:2, 1:2.5, 1:3. Sometimes you can be lucky to get 1:5 and so on. But always have your strategy make sure your strategy gives you at least 1:2 risk reward. That's why I normally say whenever when I enter a trade, whenever price goes to 1:2, I normally start trailing my stop loss from there. That is the reason why. Because I've studied my edge. So let me go through this quickly, and then in the next class you'll present. So building your complete trading system versus trading plan, know the difference. So the purpose of a trading system is the how your tactical rules. So the how, your tactical rules, your entry rules, exit rule, indicators, framework. Higher. For another thing is rarely only with statistical evidence, that's when you can change it. And then an example is enter long when price breaks structure with RSI greater than 50. For a trading plan, it's the what and why, your strategic framework, and then it contains goals, capital allocation, schedule, review process, and so on. For example, my age tells me I need to wake up very early in the morning. By 6 a.m., I need to be awake, although sometimes I don't. But it will start forming as early as 5 a.m., but 6 a.m. is also good. But my age tells me that because it is very, very repetitive and I see it happening. Another one tells me on Mondays, this and this happen. Monday is a very good day. I know many people say Monday is not a good day for them, but for me, Mondays, I've seen it. Monday is a very good day for my age. You get? So that is the information that you are backtesting, and when you are creating all these things, it will tell you. So another one is you adjust for changes, you adjust quarterly based on performance. So for example, when you see your performance is going down, you can go and look, where have I been going wrong? Something must be happening. For example, I know my edge doesn't work well with arranging, actually it works well with arranging market, but I need to see it clearly. Okay. Another thing is it doesn't work well with me having back to back to back losses. I have to go back and review and see, like, am I making a big mistake? Yes. So that is your system that will be telling you all that information. An example is trade 2 hour for your plan is you need to trade 2 hours daily, risk 1% per trade, and strictly 1%, and target 5% monthly. Like me, I can target 20% because my strategy tells me you can. And if I'm lucky, if I was very, very hardworking that month, or rather I was looking for opportunities because they're always there, I can make even 50%. That is an amount I can target very comfortably. So it is the you as a person, you go and look at your age. How does it play out? Okay. So think of it this way. Your trading plan is your business plan as a trader, and then your trading system is the product or service that generates profit for you, like an intellectual property. So it's something that unless you teach somebody else, it is only you out of your hard work. You know that. Okay. So this other section is a bit interactive. Now this is where you'll come in, and we are trying to build your system, your trading system now. So step one, you'll choose your core strategy, foundation, and then uh, for example, structure-based trading, support and resistance trading, indicator confluence. For example, I'm giving examples. Fibonacci plus structure hybrid. If you're choosing news and fundamentals, that's also another option. Step two, define your complete system rules. So as a student, we'll leave this for you to read even in future. We won't go so much, but we'll point them out, because the next section of this class, I just want you to take me through the maybe a strategy that you are willing to backtest and put it in your trading system. And then the execution process. And then step three, system edge validation, how to validate that edge and test it and see if it's gonna work. So I don't know if you have any question, so that you may enter into the next section of the class.
I know you mentioned up there that
Mhm.
maybe one wants to become a fundamental trader. It might take maybe a little bit longer than the ones who study the technical side of it.
Mm-hmm.
Um, However, don't you think also, so from our last discussion last time,
Mm-hmm.
would you say that for someone who's on their journey to trading, when it
Mm-hmm.
comes to technical trading,
Mm-hmm.
the the fundamental thing that they need to, or rather, they cannot do away with fundamentals,
Mm-hmm.
especially when there's expectation of the high news. So I thought maybe we could clarify that in this class so that maybe it's not purely that a technical trader
Mm-hmm.
is doesn't need a bit of the fundamentals, and so to speak. What do you
Okay.
think?
So if I get you correctly, you're saying that it's good to put some effort in understanding fundamentals.
Let me reframe my question.
Okay.
So, based off the last class,
Mm-hmm.
there are some baseline. A technical trader needs to keep in mind that there's some baseline fundamentals that they need to observe.
Mm-hmm.
Yeah, more like just clarifying with you that that is something that has to be at the back of our minds. Yes, you're not a fundamental trader,
Mm-hmm.
but there are those baseline elements like news, the Forex factory we were looking at, to sort of like which assists us to know or to anticipate some kind of volatility, things like that, right?
Mm.
Okay.
So now you want to, like, okay, so if I'm getting you correctly, you're saying that for every trader there's the kind of news that you must know about, right?
Mhm.
So like the other part is what I wasn't getting. So what did you want, like, for me to help with?
I was echoing what we discussed last in our last class,
Uh-huh.
that yes, you may not necessarily be a trader who trades fundamentals.
Oh.
However, since you prefer, just an example, since you prefer the technical analysis side of it,
Mm-hmm.
however, there are some baseline fundamentals that you
Mm,
need to have to keep at the back of your mind
mm.
that may affect your technical analysis because they so tend to take precedence. Sindio?
Yes, yes, yes. That's a very, very good. You brought that up because yeah, so it is a comment. I was like, okay, I wasn't getting the question, so it was like a comment from you, right?
Yeah.
Yeah. So yeah, it's actually very, very true because news are the ones that will push the market. So you need to know what that what that news is going to do for you. So there are people who take advantage of that news to play on that movement. And then for the technical guys, because they maybe they know yes, news is important, but they still will trade it technically. Then they don't care whatever came out. They will just look at the levels. This is my support, this is my resistance. What did that news do to us? It went and rejected at a support level. So what does it mean? Price likely will shoot up. Okay. So for example, next week we're expecting NFP, non-farm payroll, to do with unemployment. I told you unemployment is a very, very big indicator, economic indicator, right? So for me as for a technical trader, what I will do is I will just wait for the news to come. For example, I trade gold. Gold is now going lower, lower, lower. And then the days before the news, it will just be, it will just be consolidating. So we are not Nostradamus. Like we cannot predict exactly what is going to happen, but we have a clue of what can happen. So I will just wait for price to touch. Once the NFP has come out, two things can happen. Already that price may be priced in. That NFP may be priced in this downward movement already. Because chances are, if even without the shutdown by the US government, maybe it will have gone down anyway. But since price will be maybe at a support level, what I'm going to do is I'm just going to wait for a rejection candle and then a confirmation candle, and then I enter my long position. Okay. So that is how I'm going to benefit. But for a fundamental person, all they need to know is, was it priced in already? Was it not? If it wasn't priced in, we take the move. Okay.
Mhm.
Yeah, so that's how it plays out. So both of them are just like, one is mild, one is so into it. Again, I told you in the previous class also that the fundamental guys, they know technical analysis. It's just that they focused on fundamental analysis because they will always need technicals to enter the market. They won't just enter anywhere. They will look for a support level, a resistance level, and enter. The same way as you are entering at a support, will do the same thing. So but then they have their own information. They have it's called an information bias. Their edge, like I've just covered in the notes. The edge now is they have information edge. As you have a statistical edge, then they have a information edge. Sasa.
Mhm.
Okay.
Sawa
So
sawa.
okay. So I want you to share your screen. You take us through your trading strategy now. It doesn't have to be what you're going to use, but because you've not yet finished building your edge, but just talk to us your favorite strategy, and then you see how we can build an edge around it.
Sawa sawa. Just a second.
It's okay. It's okay.
Oh, I hope you're not hearing the noises in the background.
Not really, not really.
So you can see my screen.
Mm-hmm.
Okay. I can start from the beginning.
Yes, yes, you can start from the beginning. You tell us the name of the strategy, and then you take us through.
So I remove everything.
No, 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 no. Like, you just choose
Okay.
the way you want to see. Yeah. Just leave them there. It's
Okay.
okay.
All right. Okay. So I have switched from this kind of that were here last time. I hadn't even gone through them sana per se.
Mm-hmm.
Um, I was using this one,
Mm-hmm.
and then okay, sorry, and then okay, so this this was this morning. This is Euro USD.
Mm-hmm.
Um, so I'll share my thoughts. Then you can comment the process. But this is what was going through my mind. So
Mm-hmm.
the strategy I have grown fond of is support and resistance.
Mm-hmm.
Um, and we normally look at the 1 hour time frame or even 4 hour time frame.
Mm-hmm.
And when I placed this, and then we said it's preferable that we use the horizontal ray
Mm-hmm.
because you can adjust to where you want it to go.
Mm-hmm.
I placed the looked for the psychological uh, number. I went with the zero. This is as 1 0 at the end of this decimal point at the edge, and with this one, I thought I'd set it.
Mm-hmm.
Yeah, I thought I'd set it. So maybe I can also add a zero here.
Mm-hmm.
Yeah. And then so when I zoom out like that,
Mm-hmm.
this stood out as the previous high or yeah.
Mm-hmm.
And then this uh appeared as the previous low.
Mm-hmm.
Oh no, I know why it kept moving because I was extending it to was attempting to extend it to this other side. So
Mm-hmm.
this is what was going through my mind. Let me zoom back in.
Mm-hmm.
It immediately occurred to me that we are in a range
Mm-hmm.
uh, between last between 17th of October and today, but still there are trading opportunities in the sense
Mm-hmm.
that when I look at what happened here, for example,
Mm-hmm.
this previous high and
Mm-hmm.
this one over here,
Mm-hmm.
and the trading opportunities for those who are trading,
Mm-hmm.
how they were going about picking trades over here, for example. So this this candle over here was more of a confirmation of a sell, for example. So um, I would probably okay for me,
Mm-hmm.
I would probably be um the maybe somebody entered here
Mm-hmm.
um and they left at the previous low over here. They probably entered again
Mm-hmm.
and they stopped somewhere here,
Mm-hmm.
placed a trade there.
Mm-hmm.
And as they waited to see what would happen here, and then when this closed below this candle, we probably got into another sell over here,
Mm-hmm.
targeting maybe the previous low here,
Mm-hmm.
hivyo hivyo.
Mm-hmm.
Um, and then over here,
Mm-hmm.
I would not enter into a buy
Mm-hmm.
immediately.
Mm-hmm.
I would wait to see, I would wait for the reversal to see the if it will come back here.
Mm-hmm.
If it will come back to this to our nini, our support,
Mm-hmm.
was probably it would break through or it will go back. So it didn't come back here.
Mm-hmm.
So it gave so this is probably another confirmation of a sell. Maybe you can maybe somebody can still wait to see if it will come back and test this point.
Mm-hmm.
Um, so so you can see there's a sort of like a mini range somewhere here.
Mm-hmm.
So when that did happen,
Mm-hmm.
um, when that did happen, um, I can say rather maybe I can bring this one here. Sorry. So now I target to enter here.
Mm-hmm.
With we're working with what is it? 1:2 ratio or
One
something.
is to two.
I did before,
At least one is to two.
at least at least 1:2, and then I place my stop loss
Mm-hmm.
at the previous swing, maybe somewhere there.
Mm-hmm.
Um, yeah, so at least here you can see 1:2.
Mm. Take it a bit
Sitakuwa
higher.
kidogo
No, take it higher kidogo.
like
Then,
that.
yes, at least, yes. That is 1:4, which is okay still, huh? But at least 1:2.
Yeah.
Mm-hmm.
Or even
Mm-hmm.
somewhere there. Yeah, so there's a confirmation of a sell around here. Although I don't know whether no, I'm not saying I'm entering the market at this 1 hour range per se, but
Mm-hmm.
this is what was going on in my mind when I wanted to point out on this area of support over here. When I stretched it backwards here,
Mm-hmm.
I saw what happened here. I saw the breakout. This was a very powerful breakout over here.
Mm-hmm.
And the very powerful breakout over here, close down here. Uh, there was not much of a retest.
Mm-hmm.
So the ones who got into this swing up
Mm-hmm.
also so like benefited. If I go to my 5 minute,
Mm-hmm.
those zones disappear. Let me see. Um, I think for my case, for now, maybe I'm looking at it maybe from a 15 minutes lens.
Mm-hmm.
Because I'm 5 minutes for now, so busy.
Mm-hmm.
Um, because I'm happy to even take one successful trade and I go home.
Okay.
So in this 15 minutes
Mm-hmm.
chat, okay, sorry, my mouse is doing things tricks on me. At least there's a better story that is being told over here.
Mm-hmm.
And in order to determine what happens or how I get into my trade, you can see the opportunities that were there. When was this? Friday. And then on on Monday. You are saying some people don't like trading Mondays. I don't know.
Mm-hmm.
Uh, so you can see there's we're calling it what, some form of a consolidation somewhere here.
Yes.
This area over here. So to me, it's an area of interest.
Mm-hmm.
It remains an area of interest, and is another place here that is also an area of interest for me. You remember the zones we were drawing? I forget
Yeah.
the tool we were using to draw a zone.
Yeah.
Which which tool are we using to draw a zone?
You go there. Go to wait. No, go back. Go back to go to the drawing tool. Yes, the drawing tool. Geometry apple. The one with a pencil and a brush there. The rectangle.
Yeah, yeah,
Save it.
yeah, yeah.
Highlight it. Mm-hmm. Just mhm.
Yeah, so this area here is my area of interest.
Mm-hmm.
Yeah, yeah. It's my area of interest
Mm-hmm.
because it seems like um they're dancing around here. Either they want to maybe break through to the next level, or they're still waiting to make a decision on what to do next. As
Mm-hmm.
you can see, this is what happened.
Mm-hmm.
There was some form of a breakout, and this seemed like it was more of a test. So when it didn't go back to the zone, I convinced I can
Mm-hmm.
take a kabai here
Mm-hmm.
and put my stop loss somewhere there, and
Mm-hmm.
then maybe take target, maybe even 2:1 is okay with me
Mm-hmm.
because we are within the our support resistance zone.
Yeah.
So I have the feeling, I have the feeling that for this particular one, I should not take a big risk reward ratio. I don't
Mm-hmm.
know. I was just feeling like that. Also,
Mm-hmm.
because beyond feelings, we said we need statistics, not just feelings alone.
Mm-hmm.
So, so beyond that, yeah. So if someone took a buy here, they could maybe do our needs to do.
Mm-hmm.
Also because,
Mm-hmm.
also because, yes, it's we have a confirmation that even though we are still on an uptrend,
Mm-hmm.
my confidence level at this time, I just feel like maybe this is what I can take now
Mm-hmm.
because also
Mm-hmm.
um this was the first retest.
Mm-hmm.
Hmm? This was this was the first retest.
Mm-hmm.
Inaitwa retest, make it nakuja correction, I don't know, retest.
Mm-hmm.
And then sometimes you kind of have to wait for the second one to see if it will come back maybe to this zone.
Mm-hmm.
Before now, you can decide now you go back for another cell. As you can see, it's come back here.
Mm-hmm.
It's part of it's come back here.
Mm-hmm.
No, it's so funny. I'm pointing the screen with my finger, thinking you'll see me.
Mm-hmm.
Okay, let me remove this one. It's disturbing me. So it's come back. It has touched this zone again.
Mm-hmm.
Now it's giving me a story.
Mm,
It's telling me that these people are interested in this zone.
mm,
Um, so I'll give it time. I'll wait. You can even see what's happening here. I think there's some news happening. So I
mhm,
will not do anything. When I
mm,
see this, I'll wait,
mhm,
see what these people decide. If they'll come out of this zone entirely, or they'll break out again before I make any other decision.
mhm.
And then the other one was gold.
Before you continue, go back to the Euro USD. Okay, I have one question. What is your confirmation that you need to enter?
Here or here.
Because you need a confirmation candle.
Okay, back here.
Mhm.
Actually, back here I would have even entered over here. There was an entry here. So the confirmation candle, I have this
That bullish candle,
so
right?
the bullish candle over here. And you can even see there's another confirmation here.
Yes, a
And
doge.
even here, I
Yes.
do it, and even this one. So, and then you can even see this one.
Mm,
Like this
good.
was just a clear one. Yeah.
So go back now to the end to we are at right now.
Yeah. Yeah.
So for this price, I want to ask how many minutes are remaining. Let me see your clock. 2 minutes. If this bullish candle, the one that is forming right now, but no, we have like 30 minutes, 15. So you have like 8 minutes remaining. But I will go back to the 5 minute time frame. Just a moment. Yeah, already that move has already played. So if this go back now to the 15 minute time frame. So if this candle happens to the one that we are in, if it ends up to close bullish, that is a good confirmation candle to enter a long position. And the reason why, let me just clarify something. You've drawn the purple box you've drawn, that is a resistance level, right?
Yeah.
Now you can see it played out several times. It was a resistance one time, the original time, then the second time, then the third time kidogo, then the fourth time kidogo, and then it flipped. You remember the concept of support and resistance flip? So now
Yeah.
it stops being support, it becomes resistance. Sorry, it stops being resistance, becomes support. But what will help us and guide us to know that it is actually a resistance, sorry, a support now, it's if we get a rejection candle, and after a rejection candle, already we have a rejection candle. You see this week, this bottom week has formed, not the one that
Mm-hmm.
is forming right now. The previous one has rejected kiasi. It has taken the liquidity hapa chini. Naingiza vitu ngumu, but when you
It's okay.
watch in future, you'll understand. But it has grabbed that liquidity, and then
Mm-hmm.
even though this candle is now going down, it had been going up. But for us to know it's indeed a bullish candle, a bullish entry, we wait for it.
Mm-hmm.
Yes, there. We wait for it to close. Sawa. If it closes bullish, we are set to go. If it closes bearish, now we don't have a setup. We wait for the next one. Sawa.
Mm-hmm.
But you've done well. Okay, so let's go to gold now.
Yeah. When you go to gold,
Mm-hmm.
1 hour. My cell played out. So So I went 1 hour.
Mm-hmm.
I was still using support and resistance.
Mm-hmm.
Okay. Now, when I saw these two shoulders over here,
Mm-hmm.
um, yeah, it's also worthy to say, okay, all right, yeah, that is resistance and probably the previous support was somewhere maybe around somewhere down here or something. In
Mm-hmm.
the in the larger scheme of things where the previous Nini was. But in my mind, I was thinking, that's quite a long range for me to decide what trade I can get into today. I don't know if that's a misleading thought.
It's okay.
Uh, so, so you can see here there was an uptrend.
Mm-hmm.
Um, I think was this before Trump made those news and people are liquidated somewhere.
Yeah.
Uh, something. So this went up, and
Mm-hmm.
then so this area was, you can see it was tested close to 3 times. It
Mm-hmm.
didn't break through. So
Mm-hmm.
so you can tell there was a confirmation candle from this one over here.
Mm-hmm.
This one. Like all of them were just saying the market is turning. Even this one.
Mm-hmm.
So someone could comfortably get into uh, a sell, maybe even here.
Mm-hmm.
But may I be conservative to get into a sell here
Mm-hmm.
and keep it. So targeting the upper chin here,
Mm-hmm.
this previous one here.
Mm-hmm.
I would be conservative that way. Is this huge? This is huge, eh? So I would have gone
Okay, it's okay. There's
westward.
nothing. There's nothing huge because
Okay.
gold gives you those moves so that when you incur losses, you are able to pay back for them.
Oh, okay. But
Mm.
that's what I would look at this previous part here and keep it at that, and
Mm.
then step out and probably wait for another confirmation to see if it will break this previous um, area over here, which
Mm-hmm.
it did. You can
Mm-hmm.
see here there's a confirmation hapa. Sorry, mistake. There's a confirmation here.
Mm-hmm.
Um, but even if I see this, I don't enter in immediately. I probably maybe just wait to get another confirmation. You can see um this happened. Hey, this grabbed a huge one.
Yeah.
This grabbed a huge one. So came back and tried to test this part over here, haikufika.
Mm-hmm.
That's a confirmation for another cell. Yeah. So where
Mm,
I
yeah,
had gone to,
that's.
I think, 15 minute. Yeah, I come to the 15 minute.
Mm-hmm.
It was 5. Gosh. Oh, I know what was happening here. Yeah, before we logged out,
Mm-hmm.
I kept clicking on this short position over here because I was wondering why is it not responding?
Mm-hmm.
So there are so many. Let me see. Yeah, you can see. There's so many. Yeah, so I was just saying there are opportunities within this place over here, within this section of selling.
Mm-hmm.
Um, yeah, but what they could up in 1 hour.
Mm-hmm.
And I have this very, there are people who would say, Did you catch my question?
No, no, no.
Upotelea nad.
Imepotea. So I was like, hii steamer is not steamering. Hii
Okay,
internet.
pole.
Mhm,
So if I remember
mhm,
well in our classes,
mhm.
at no point were we taking a major cell maybe from here and maybe targeting somewhere near where our support is. Is that deliberate, or someone can choose to do that and wait for some days for it to play out, or it needs somebody, or it depends on someone's risk
Okay.
appetite and their leverage?
So I think okay. I wanted to show you in the next class was we are remaining like 2 minutes, 1.5 minutes. So there's okay, there's a way I do support and resistance. So remember the market is moving as we go. So for example, you see where you've shown support and resistance, the trade would have been, I'm pointing like as if it is my computer, but I'll show you later. So for example, when up so that's why I'm telling you the system now we are going to create. You need to know where your levels are and why those levels are important. And the most important thing, I think the most important thing that will benefit you is knowing and understanding market structure. So write that down. Market structure is the number one thing you need to understand. And a good way to understand market structure, depending on if you want to be a day trader, a swing trader, and maybe long term, you need at least the 4 hour. So if it's not the 4 hour, you can start with the weekly or daily. But if you're a day trader, that is, you take like 2, 3, 5 trades a day. You can start with 4 hour, the 4 hour time frame. That is market structure. The higher high, higher low, higher high, higher low. Nakumbuka hiyo, lower high, lower low. Okay. The next
Yeah.
thing is the support and resistance level. Go to the 1 hour. And then the execution. The execution can be 15 minutes or 5 minutes, depending on how the frequency you want to trade, or rather what you're comfortable. Both are okay, both are perfect. It's just upon you. So I think time is almost done. So for me to answer you, so I think I need to share my screen so that I can answer you well. I think it would be
Yeah.
beneficial that way. So let me head over to the gold the gold setup. Let me use this one. That is not busy. So I've told you the 4 hour time frame. I think this is me being me after learning, okay, after not learning rather, after backtesting for a very long time and using this strategy for a long time. I don't have a mouse. That's why I'm a bit struggling. So what I like to do, the 4 hour is very, very good with giving us the market structure. Like if we start from here, it made an impulse, correction, and then it failed to, then another impulse right here, but it failed to go up, and then it offered us a, an impulse on the downside, meaning we are in a downward trend now, and then a correction didn't go all the way, but this is where now you are telling me about, right? So the first thing that I like to do, I know we have a higher high and higher low. So what I like to do is, you see up here, this is this candle right here, this one is the one that offered us the swing high. Like if we take our fractal indicator, it is, if we just click, let me just add it quickly, fractal. You see, it is this candle. If you remember our class on support and resistance, I think it will, if you go back to that class, I think you'll understand. You'll see that that is what I told you. So you come here. For me, I like labeling them as boxes. I know, yes, they are I can start with the horizontal ray. There's a line, but I think according to me, I can't fully depend on just a line, because price can come below or above, and you can see instances of where that happens. So I normally say, or I normally advise my students to use a box, or rather a zone, a support and resistance zone. So that is what I will do. Now, once this one formed right here, I have my levels. So if I draw them quickly, there's another one right here that came there. I need to add another box. The box needs to be a bit big. They're almost the same size normally, but they normally happen. So this box played out up to there, because it formed a higher high, higher low, and then it's just taken liquidity, and then it went down, and then it formed a higher low. But this one was so big. So what I do is also take another line, put it there, take another box, put it there. But you see, it's a very big one. So we'll use these ones for now. We won't go backwards. We'll just focus on this. So have my higher high, higher low, higher high, higher low. See there? So what I do, the 1 hour time frame is the one that now I like to use it to give me what? To give me my support and resistance levels. But since you've already used the ones on the 1 minute, sorry, on the 4 hour, it's still okay. Now, you see, this one had already played out. This one gave us several opportunities. It gave us an opportunity right there. This one, just the adjacent one, it gave us another opportunity here. But since now you can choose, you can use the 5-minute time frame. So if you are not using the 4 hour, you would choose to use the 1 hour. But you see, it's a bit busy. It's kind of busy. It can confuse you. So it's best to start with the 4 hour time frame, which will give you better zones, so to say. So for me, I like to go with the 5 hour, but 5 minutes, but you can use the 15 minutes as well. It's up to you. So for precision, of course, the lower time frame will give you better precision. Entries, because you see price is very fractal. So you can't like, let me remove this. You can't like enter. If you enter late, although you'll get an opportunity, it is detrimental to you. So this is the time. So the first instance, we have this. So what I normally like to do is, first of all, I have now I'm telling you my setup. So you're very lucky. You're very, very lucky, Rehema. You're very
Mhm.
lucky. You're very, very lucky. If you're getting this,
No, no,
sitakunyima. This is
usiitwe utaitwa kwa recording.
Sitaitoa. It's just for you. The others may not know it is watawatch until hapo watajua, but this is how I do it. So there's a concept I like to use to combine with support and resistance that is called supply and demand. Write it down. We'll go and learn more about it. Supply and demand, the main reason I use it is because it offers me what? It offers me, I want to see where liquidity is. Do you know, say I talked about liquidity, where the banks like to place their orders, and where it is efficient for them. So the market normally tells us a story. Me personally, what I've seen that has benefited me most is to use the past data that the market is giving me. And the market is very generous, very, very generous with the information it's giving us, okay? Hata niko inspired because I want to help you. So what I do is the market goes living support and resistance everywhere. Sindio? It goes living supply and demand. So I told you, remember I told you supply and demand, support and resistance are almost similar, but the difference with supply and demand, it is where the liquidity is. How do you know supply? I didn't go deeper into it because I didn't want to expose my nini so much, but the basic way I can explain to you ni order blocks. So watu wa ICT wanazitanga order blocks, but for you an example of a supply and demand zone like this one is a supply zone. You see, before a huge move, this candle kando ya blue iko hapo, hiyo ni a demand, a supply zone. Why? Because this one I'm pointing, because next immediately after 8 a very big push went down. Okay, another one is this one. Before this big push came, you see, and the market came and rejected just there. That is a demand zone. Another one is right there. Another one is, so they're all over the place. They are similar, like liquidity is, that means liquidity is everywhere. That means supply and demand zones are everywhere. That means support and resistance levels go forming. But the only way for you to enter safely ama in a better way is to identify supply and demand. Hiyo ni homa kubwa nitaenda kukuambia uende ufanye supply and demand. Sijaitengeneza video zake because of course I don't want to give out my intellectual property ama what I've learned, but I'm just telling you, like, go you learn more about supply and demand. It will simplify so much for you. So what will I do? This Nini has already formed, and even when you go to the 1 hour time frame ama the 4 hour time frame, utaona ili happened before. So since Cecilia specifically anaendanga with the data, tulikuwa 15-minute time frame, sorry. She goes with the data that has already been formed by the market. What does she end up doing? She has already identified her zone, her support. Is it only support and resistance level? So I don't like drawing the supply and demand zones just because I know them. I can see them, but I can draw them if I want or not. So not to confuse myself, I can also opt out not to. So I come and see, where am I likely to? Because when the market came back to this place, I knew, okay, there's a chance it will go down, but I need to grab my liquidity. Since this is a supply zone, the institutions have to, and they make it very easy for you. The institutions have to grab liquidity. So they can grab this liquidity up here. These candles zitakuwa wicked out. They can take this liquidity, this candle, and lo and behold, they took this liquidity. So I come in, the reason I'm saying that is because this candle wouldn't be a valid entry. So I just come, take my tool, take my risk reward, put it above that zone. I like putting it above the zone. So that's why I'm telling you, the 5 minutes time frame gives us better. It gives us better. It gives us better what? Better precise entries, because you see this stop loss is too huge for me. 240 is huge. But if you go to the 5 minute time frame, it is better. Like I have a more precise entry. But you see this, the entry is still valid. So you may ask, why do you prefer 5 minutes? That is one of the huge reasons why. So where is that market? Need the market. Come on. So the candles are too small, so it may be a bit far away, but let's just go back. Still go back. So I think in the class of support and resistance, I told you one support and one resistance can give you 2 to 3 entries. Did I tell you that? A valid one.
Yeah.
It can give you, so you don't need to like rush at sana. So for example, this entry, see, I was waiting for either this one or this one to be taken out. This highs, this two, amahi. But since this one was taken, my entry would actually be somewhere. Yeah. And then my stop loss. You see, we've reduced significantly the stop loss. So the reason I'm reducing the stop loss is because I'm getting a better risk reward, first of all, and I don't have to risk so much money for myself. So this entry ended up giving us a 1:7. It gave us 275. Let's see. 275. No. It gave us 900. No. 200, yeah. 200 and 2,792 pips. Those are so many pips, Rahema. So many. And it was not the only entry I got. This is one. Since this one wasn't invalidated, I had another one here. But this will come with practice where you can be layering your profit. So another entry, you can take it a bit up and then target this one or the next one, the next maybe down here. And this one gave us around 235. So already you would have made about 5,000 pips, just these two trades. Higher. You come, and this is probably a day, only a day higher. The price came to this support, and I'm not the one who came. The market had already offered us. Okay, had already offered us this thing because I go to swing, like I go swing to swing. Now, for some people, they may be scared to hold to the end because maybe they're beginner or intermediate, or according to them, they can't hold that far. What you can do is you can take your profit after this swing. You see, it's still a lot of money. Another one, and then the third one. You see, so you could have made a very substantial amount of money because you see, from here to here is about 300. How many is this, pips? Three, is it 3,000? No, 332.
We have,
Oh, 372. Yes, 372 pips. Sorry, you are saying something?
yeah, 327. Umesema, you don't have glasses.
Yes, I don't have glasses saizi. Nimesahau
It's
kuzichukua.
okay.
So,
No
now
problem.
the other thing is, you see this new one, we were expecting us, according to us, we were expecting this to be the swing low. Sindio? The market
Yeah.
to reject from here. But something interesting happened. It broke to the downside. If you look back, you'll notice this is also another support, a resistance level. There was some sort of supply and demand going on around there. Because the market reverses, retraces around supply and demand. So we wouldn't have traded this. If I show you in the 1 hour time frame, I'm on the 4 hour time frame, you'll see it clearly. Let's see quickly because of time. So where is it? Come on. Yeah, a bit rush. It's delaying, so good. So I can go like that. You see, we were expecting it to come out here, but it ended up here. And you can see here there's a supply and demand, there's a support and resistance level. You see all this support. So ukiangalia back, it was playing around this one. This right here. There was a significant support and resistance level there. We can also use these two. So price goes like that. If we go to the 4 hour time frame, because we are building our support and resistance levels in our 4 hour, according to this case, let's see how it played out. Let's just move backwards. As you can see, this is our support because it was an impulse correction, a small correction. So it played out from this zone, this right there. And you can see even in the future, it came again and played out. So if we draw our support and resistance zone here, you see it was playing out. Let me just draw because of reference. In future, when you come back to the video, you see how it played out very, very well. Si unaona
Yeah.
ilikuja ikaingia tu hapo ikashup ikapanda. So that's how price normally behaves. And then it comes to make things even more interesting, there's usually some sort of a supply and demand. Like if you see bullish candles, 1, 2, 3, 4, this is already a there's some sort of supply and demand going on already. Or the other way is one bullish candle, but you'll go and learn. That is a whole topic you can go and learn. It won't take so much time, but you can go and learn more on that. It's very interesting and you'll learn more. So you can see then price came back again in future. So this level here, it came and formed, right? So as we didn't have a play in it. So let's go back to our time frame, 15-minute time frame, mama 5 minute. Me, I'm obsessed with 5 minutes because of the entries. So let's come back and see how to go about it. So I hope you've understood the first part I've shown you already. I'm trying to simplify to reduce your learning curve.
Okay.
So I hope sijaku confuse zaidi. But look at that. Start with market structure, then support and resistance, and then sasa your entry. That's why you have, now that's what we call a proper top-down analysis. Sawa. So
Sawa.
because if you are able to identify that, so you will have your rules. Now you say if you are trading support and resistance, when I see price coming back here and I know it can offer me 3 trades, I don't have to worry, I don't have to rush, and I don't have to overtrade ama over risk because umeona inatupea so many pips already. So yeah, this is where we were, and you can see this is our zone, our support zone. Now, price didn't end up coming, and it's okay. It's okay. It already played out. It will help us maybe in future. But then something interesting has happened. This support, this resistance zone, it came again to play out right there. I look for what? Since we are using the Nini is so far away, I can use this. I can use this preceding ones. I can use also, I can go back and check the previous one. So I come here, I take my short position, my short position. I enter my short, my target is, so this one is giving us about 200. So you don't have to be shy. Now some, because I taught you this, the lesson on risk management. So that's why you calculate your lot sizes accordingly. And then you come very, very well and target this demand zone. So if we look, this is a very huge move. But I'm interested to see how did it play out. So this would have taken even more than a day because those candles are too many. But let's just see because of interest. And you have what? You have,
Yeah, that was just within a day.
yes. So you can see it is 2000. How many is this? You have more than,
2,900 and yeah,
how many pips are this? No, nowadays I don't.
29, 29.51.
Yes, 2000, more than 2000 pips. No,
Yeah.
it's 17. No, these pips are many. I don't think it's but let's just call it about 29. You're supposed
Amount
to count.
is
You're
29.50.
supposed
Okay,
to count.
17,000.
Yes, 17,000. Supposed to be 17,000 pips. This
Mhm.
other one, because it's a risk reward. Because if we say 200 and 200 and just a moment. Just a moment, Rehema. Be patient. Kidogo tu. I just need to confirm something. 21 times 7.81. So it's supposed to be 1694, if I'm not wrong. Either 1694. Yes, 1694 or more. I can't count right now. And gold, you have, it's not straightforward. Like, yes, it's 1700 pips in just one move. I think it's correct, 1700. This other one was, let's see, let's just go back and see. Hey, but it can't because this one, it was, yes, this one was 904.
9,000.
Because I took this trade. I remember I took this trade. I got like 800 pips. So this is like 904. I'm a 905, 900 pips. Because I risked
Mhm.
around 100, yes. 900 pips. And then this one is 1,700 pips. So basically that. Now, this trade wasn't alone. There was one, because we're still in the demand zone. We got one of them. You need a liquidity. This one you would have entered or not, but you needed this liquidity of which it didn't form. So this one wouldn't even have been an option, but this one would have been. So you could have entered another trade. So this one this one resistance gave us so far 4 good trades. And you target more, you reduce now. You can reduce, you can either target further, you reduce. You reduce your target. So in this one trade, you'll have made about 4,000 pips. I'm at 1.7, 1.7, that is 14, 3.5, about 3,3500 pips. These two trades, So the same way. Now, an interesting thing happened. I can see a flip happened. So this is one way. So if we're using now Fibonacci, what you do, because you are at least out of your backtesting and all you can catch other moves in between, but this is a bit advanced. I don't like once you take a move, just take it, just be trailing downwards. So there was a flip that happened. First of all, I took this trade because you see it came and rejected. I took a long position, but I was targeting these longs. It didn't happen. I got one loss. It is in my Telegram. I shared this trade. It was a loss. The other one is once I notice it is a loss, I know a flip is imminent, but I don't have proof. I wait for her because you remember the class I told you about support and resistance flip and how it is important. This is why.
Mhm.
So this flip happened. I had to wait for a flip because see inasemekana it didn't go up again. So I wait for a flip. It comes back. And then you see now this candle, once it rejected, I enter my sell position. So I have another trade coming. So I enter my trade in the next candle there. I target my about, and then gold was giving us so many big pips, and then you come all the way down. That is about 1,000 pips, and then you can come extrapolate, and then the benefit of having trailing, you see, like here you would have been discouraged because you almost made so much money, and then unaiona ikiponyoka, so that's the other advantage, and then it came to full TP higher, and then we now have this move. Once it comes to a support level, unaona tulishazichora before, but they are playing out now. You come again, take your, this is the rejection candle, my confirmation. I enter my, unasikia hiyo language natumia cause of time, because you won't have time to like go through. We'll just have a
Mhm.
reference point. You need a rejection candle and then a confirmation of entry candle. So for example, since this doji was too big, I come and make one like that. I always target the next swing point. I would have targeted this place, but of which I would have actually, but I know like there's a very high liquidity here, ama kuna so many, there's a resistance level right here, so chances are I should be looking at this one, but still you are gonna make a lot of money because your risk reward is 1:584. And then you extrapolate like that. And then you come, and then it didn't go to full TP, but you see you booked so much profit. More than, I think, let me see. And then you go like that. If you go back to the class on support and resistance, you found like it is better for you, I think it will help you even more than 1,000 pips. And then you come back again. You see, it gave you another opportunity right here. So you wait, and then you look, okay, it has to take this one, but since this one is the main one that needs to be taken, as in liquidity and all, and then kumbuka ile story ya bado ya supply and demand. So your supply and demand was somewhere here, it has to come and be taken out. What we wait for is a liquidity grab. An example is this one. It will have either taken this one, but if it doesn't reach to this one, there's another one here which was taken out. The fractals. Remember the tool, the fractals I was sharing with you, why it's important. You come again and put your entry there, and then you target these highs, at these highs right here. Because again, since our full TP was not hit, you notice that the market is like going downwards. So you start preparing your mind psychologically. We are somehow in a downward trend. And if you can move it, I don't know if our stop loss was hit. This one we were lucky, and you see we were lucky to get more than 800 pips. And our trade was still active, and it even went and went and went. Another one, like you go doing that, and I think is sasa ndo tuko hapa sasa. I think bado na bado inasonga. So there's so many opportunities lying all around, and then this is where we are in this point in time. So basically, what I'm trying to say is you go doing that. So first thing, for our market structure, note that very carefully. Second thing, 1 hour time frame is good for confirmation, or rather also support and resistance. So market structure utapewa pamoja na support and resistance. Then you choose your entry. If you want for 15 minutes, just know you will leave so much on the table and you won't have precise entries. But 5 minutes is okay. And I think I had told you before, 5 minutes can also be recognized as a swing trading, because some trades can go to the next day. So majorly, some trades can take a while, but we took them on the 5 minute time frame, the same way. Now, I think because of time, I don't know if we will be able to finish in this class. I'm not so sure, but I wanted to take you through. Let me encourage you. It's not a lot of work. You see the few minutes I've taken to identify support and resistance in market structure. So umeniona nikitafuta higher high, higher low, higher high, higher low, nikazi point, of which you need the most recent. For example, right now I need to come and look at the higher high, higher low that this time. So for example, hapa ili range kidogo, but kuna higher high, higher low. Unachora hii zone, and then higher high, higher low ishakuwa acted upon, so inakuja kutarget huku chini. So price most likely itakuja all the way down before ianze kutafuta support. So we can just draw it out, right? So we can draw it right there, and then draw our zone. Now, just up there. And then you can color code them. You can choose a color for each, so that you're not, once they are done, you just either push them backward or you delete them. So you can either do that. You can either delete them, and then you just push them back. Pushing them back, I mean you do the like that mpaka kwenye ilimaliza kufanyika, so that it doesn't interfere with your future reference point. So for example, you have another one here. So this is a let me remove this quickly. So in case price comes to this level, because I'm not Nostradamus, I can't predict anything. So the best I can do is have my levels, And since I know the market is going to give me to use the levels that it has already given me, I come and a price can either come back here, but since it has made this SR flip, it will come here. This will be like a retracement level to go down.
It's meant.
Itakuja hapa. So what I do now, I come back to the 1 hour. I just check. I just verify things one two pale hapa kule haraka haraka. I just come and check, is there some levels I'm missing? For example, there is this level right here. So price may choose also to come here. And another thing, I look for a supply and demand. There is a supply and demand, supply and demand, supply and demand, supply and demand, supply and demand. Good. So what I do now, I may have this level to add and maybe this, of which it doesn't even matter that much. And then I go to my entry time frame, and now I wait. You see, once you have it like that, it's not that hard for you. So there's also a supply and demand level here. So this will be a key area of interest, a key area of interest, and another. You will just look back. It's far away. So you don't get,
Yeah, and 5 minutes.
yeah, don't get tired. Usinini hata kama ni mbali. But I don't normally, for things that are far away, in the lower time frame, I don't even think about them that much. So chances are price is gonna go up in this instance so that it goes down because it remembers, and it remembers just adjacently. Ama the other option is, if you see it's so far away, now you go to the 1 hour to look for the support and resistance levels. So you can see price came. So chances are, if it was me who was trading at this point in time, this would be my position. You can go and check later. I would enter right. It is giving me slightly a smaller risk reward. My first nini is here, but since I want to target here, I would target just there. So I would have a risk reward of 1:5.3. I would eat about 431 pips if I'm not wrong. And then I would have risked 81 pips to make that amount of money. And there I have it. I have it now. So I can just screenshot it so that you can check it out later. Let me just share it on Telegram. So basically that's what I do. So that is a form of we have less than 4 minutes. That's a form of a setup because you see I'm going to look for specific things. So umeona naenda nikitafuta specific things. Every morning I wake up, I go looking for the same thing. Market structure, support and resistance, 1 hour for confirmation just in case there's a support and resistance level I'm missing because some days you may miss it. And then you go to the 5 minute time frame to look for your confirmation. Confirmation inakuja after rejection candle ama after nini. Once you're invalidated, it's okay. Wait for the next setup to come. Hakuna haja kunini. Hii ni pips kidogo sana. Hii ni pesa kidogo kulose. But you see this amount of money is so much. So yeah. So if you're risking like 0.01, you would have made about nini. But another thing I like to tell people, this is me. This is me. For you, since you're trading support and resistance, you don't have to trade like this. You wait for your price to come to these two levels. This one and this one. Tafadhali, ngoje kuje. Mi hapa nina gamble. Hapo siku gamble per se, but according to what I've taught you, support and resistance, you are not supposed to trade around this place. So you wait. Either price ikuje hapa juu. Alafu I'm anticipating as well. Yeah, even my language has changed. I'm not even, so I have to say that disclaimer and warning. You need to trade at a support and resistance level. For example, this was a good one and this was a good one. And chances are this will fail. And the reason why is we have an entry, a valid entry right here, a very valid entry right there. Sorry. So this price can also go down. So you see, sometimes you miss some things, but our end goal is to make as much money as possible. So this is another one. This is the OG, the original one, because you see there's a rejection there, and then there was that flip, and then it came all the way. So this is our end goal. You see, so you go like, so let me just push it backwards so that you don't get confused. But this is the OG. But since we also know that price reacts under these conditions, blah blah blah, it can come back here and then it goes all the way down. So basically hivyo tu. So you write those notes. So hii nimeongezea hii ya kutrade katikati because of something like Fibonacci. Now Fibonacci now comes in these instances, which is to confuse you. I don't want to confuse you. Just use support and resistance. Una mark your support and resistance levels, zinafuata na zones. Unaenda confirmation 1 hour, una enter at 5 minute. At 5 minute time frame, in the 4 hour, make sure you have a supply and demand zone. 5 minute time frame where you're entering, ensure you're entering at a supply and demand zone, and you will be good to go. You'll make so much money. You can do this in all the assets or instruments you are going to be trading. So
Yeah.
yeah, so I hope I've not confused you, but in case of anything, go back to the class ya support and resistance. Sijui kama tukuwe na the last class tumalizie. Naona time imesonga vibaya
Yeah,
sana.
anytime he sees on, I don't know, I should say I'm lucky, because I know kwanza
Mhm,
ikikaribia towards mid-November, December,
mhm,
things will be a bit tight. So I'm
yeah,
glad at least we can have another class.
mhm.
I'll go, umeniambia I go study more on supply and demand as well
Yeah.
to add more meat and confirmation to my analysis.